Okay, welcome everyone. Hope you're doing good. New start of the week. And price finally touched support. Wow, we had to wait so long for price to actually touch support. But eventually it got there. Jeez. A lot of patience was necessary. Okay, good to have you here everyone. Let me shut down the music here. There we go. Up. And I wasn't yet completely finished deleting some scam comments. Sometimes you see them, of course. So let me quickly manage this. I also have Jeroen keeping an eye on those type of comments where they talk about some random shitcoin that no one has any interest in. So let me just ban all these people. Ups, okay. All those scammers out of the way. Okay, very nice. There we are. So welcome, everyone. Hopefully you're doing good. And hopefully this range has not eaten away your profits because this range was still, I mean, we're not out of the range, but of course, took a long time to actually drop into support. We've been talking about this for so long. The last day, of course, was a Friday, and price moved to the upside. While we were live streaming this bit, I was like, I mean, we didn't hit the box, right? It's annoying. We didn't hit the box. I do like to have turning points on the boxes. And then we came back down, still didn't touch it. Like, didn't touch it. Nope. And then over here, we actually did. So finally, a nice little bit of a reaction here to the upside. New York, of course, opening in about 30 minutes. See what happens. Still got another area of support just in case. And to the upside, I mean, there's not much left. I have a daily at 101.4. And if you pull a volume profile, then you'll see the value area high is at 99.5. That's pretty much the only two levels. Let's see if I do it over here. Yeah, so this is the potential bit of resistance still here, at least to keep in mind. But, you know, 99.5, 99.8. Yeah, let's just put a white box here. So at least we will remind ourselves there's two value area highs there. Let's see if it matches with any of the fibs. The golden pocket is there as well. So, okay, at least a little bit of resistance to the upside. So that's a little bit of resistance, and then we have the support down here. That's pretty much it, no? So let me keep this on the chart. I'll remove this daily naked point of control because we traded through it. Keep the monthly on the chart though, and the daily up. There we go. Okay, there we go. Perfect. Okay, set up. Yo, what's up? Maybe a Band-Aid. Hello, everyone. As I'm traveling to the US to meet Robert Prechter, founder of Elliott Wave International, author of Elliott Wave Principle, I will, in that trip, also meet maybe a Band-Aid. And I will also meet with Adam. Those are two mods. They both live on the same side of the US. They live between Miami and New York, which happens to be the route that we are taking, my wife and I, while we're there. So, perfect. So, I'll be meeting them for the first time face-to-face instead of all the online stuff, of course. So, yeah, welcome, everyone. Versin, what's up? Lucky Gupta, hope you have a good day. Hope you have a good day as well. So far, I have a very good day. I made myself, so I've been bullet journaling, right? Like I said it last week, always a bit of chatting before the analysis really starts. We'll get into it. Of course, not much has changed compared to this morning, but we'll still cover it. But I didn't know about bullet journaling. I got in touch with it because I was looking some self-improvement and development type of videos, got into bullet journaling. I was like, oh, that's interesting. I do like journaling in a way. So got myself a notebook with dotted pages. And then basically what I did over the weekend is create multiple, so I have a yearly overview and goals and whatnot. But then I also have a year in pixels page, right? Like you can see, I have a couple of trackers. So cold water exposure tracker as well. Wait, let me show this in the big cam. So mind my writing. Yeah, I was studying to become a doctor, not an author. So year in pixels. And then this is the cold water exposure, which this morning was a cold shower. I did see 2 people in the ocean actually this morning. But yeah, I got multiple pages here. I stretched this morning, a sleep tracker. I have a water, drinking, reading, read some pages this morning, step tracker. I already have 10.1K steps today. It's going good. Went to the gym. So we got the gym session in. My protein target almost hit as well. Got trading pages as well, by the way. So got a trading tracker. So basically what I track trading related, let's get back to the chart, is I'm tracking my execution. Is it good, bad, or did I have doubt? I'm tracking my profit, loss, or break even. And I am also tracking if I respected my plan, yes or no. So those are the 3 things that basically I track trading related, and then I also track that's daily, by the way. And then I also check weekly if I had profit, loss, no trades, break even. And also with regards to months, I will track if they're profit or loss. And if break even, I'll add break even. But so January was a profitable month. So a nice green box in the January one. I also track how much profit I then made. So, it's nice to keep track of the numbers, I suppose. And then I have a very big book list. Still have books to add. Eventually, it's going to be 70-something books divided in different categories. And it's I made also daily planning. Woke up at 5:30 this morning and immediately got into it. So I changed a little bit of my morning routine. And it's actually been a very good morning. I take a bit more time for myself in the morning. I wake up, do a few things, then do my analysis. Once I'm finished with my analysis, I make my own trading plan. Once I'm done with the plan, I'll go for a walk. Then I have a cold shower or ocean dip. Then stretching, reading, and then eventually silver updates, making the video. And then, that's where everything really starts. So the first couple of hours of the day are just for, it's like me time basically. And it's nice. It's nice to start in such a way. Also a reason why I have so many steps. 10.2K, we're doing good. So, the analysis, move to the upside. Still the potential for an ABC here to the upside, by the way. We will get in the analysis and explain the polylines. But for the yellow polyline and the orange polyline and also the white one, of course, you would need to go down, which means this has to be an ABC, which then preferably finishes very soon, because you would then count a wave A, B, and then 1, 2, 1, 2, 3, 4, 5, 4, and then a 5, basically. Alternatively, this becomes 1, 2, 1 flat, and you continue. So bullish and bearish there in the 15 minutes explained. But even if you do move down and hit support, still looking for a bounce nonetheless, which is what we are keeping an eye on. Okay, let's get the analysis going. We're gonna zoom out. Zooming out is always nice. So let's put that in targets, turn everything off. I also think it's important to zoom out because it's important to know where you are in the bigger scheme of things. With all of the local movements, people tend to forget if they zoom in too much on a 15-5, or people tend to forget where they are in the bigger picture, right? And the bigger picture is still bullish. I always do that in the morning. I tend to go to the monthly time frame, weekly, daily, just to make sure I'm prepared zooming out. So we're gonna start the analysis. Versin Abdul, what's up? 83K. Your bear scenarios are currently too conservative, and I mean that with respect. I like your TA. Yeah, we'll see. Bearish scenario 83, that would be very low. If you go to 83, that would be for a wave 4 incredibly low. So, and by the way, mind you that my 4-hour bearish scenario, not that one, actually, the other one, which is still bullish, where is it? So your target, maximum target would be 80.9. But what you don't really like to see is a wave 4 of a higher degree going that low below a wave 4 of a lower degree. You know, generally your wave 4s, they tend to create a bit of an upwards type of channel, or at least a bit of a range here. You can see the lowest degree wave 4 in white, and the yellow one found support on it, which is perfectly fine, but you actually don't want to lose this range and move all the way to 80. If you do, you're going to count it different. You're actually not going to count it a wave 4. You're either going to count it as a bull market is over and down you go, right? And secondly, which would be insanely bullish, would be adding, for example, another 1-2 here. But according to time, you don't really have the time anymore to add another 1-2, because that means you're going to have 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5. So then what happens then is if you do go down that far, it's not, of course, going to count it as another 1-2, because that's just way, 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 way too bullish. You're going to count it then like this. But then this goes here. That's going to be 4. And then your target, I think, is still quite similar, actually, on the weekly time frame. So, or daily. I'm on a daily. Let's go to the weekly. Up, 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 up. I'll zoom in. So this is the log target, but then this is the 302 on the 80. Of course, you're not allowed to have overlap, right? So 73 would be invalidation, and then the 382 at 80, that would be wave 4. But yeah, that's at the moment, right, with the current local price action, just simply, quite simply, not the highest probability scenario. If anything changes, you'll guys be the first to know. But at the moment, it is irrelevant to look that far down. So, I have the scenarios prepared. I have them in my folders. I know exactly what scenarios have what probabilities. And currently, with the local price action, that has not, doesn't have the highest probability. So, yeah. Till local price action tells us something different. If we get a 3-wave ABC up and then we start to move impulsively down, we'll know. But that's something we'll figure out later. At the moment, it's irrelevant. Mukandusi, welcome. Alexandra Guilian, Mudragura Legionario, maybe Ben 8, what's up? Elliott Trades. Exactly. Raul, what's up, man? Daily journaling is clutch across the board in live. Helps keep me grounded on and on course personally. Yeah, I never really journaled, but I tend to write things down now and then, and now with this I try to be more serious, see what it does. We'll get to the analysis. Do you have a tracker for the mustache as well? I'm actually going to shave later today. Yeah, it's that time. Maybe a Band-Aid. Thanks, man. Thanks for the support, dude. Errol, welcome to the team. Make sure to fill in the form. We'll get you sorted. Later in the past, how are you doing? Okay, let's start. And I mean, we were talking about the weekly anyway, so why not start on a weekly time frame and then move some of my... oh, no, I can reach it. Here we go. So, not that one. I don't know the exact scenarios I have in my folders. Let me actually have a look here, because I got so much stuff I never look at. Oh, here you go. Talking about very bearish scenarios earlier, or bearish A, B, and then a C down. End of Bitcoin. Anyway, we have all sorts of stuff in there. So this would be regarded as your more bullish scenario, and this is your bearish scenario. And then on the daily, let me quickly prep it for all of you. Ah, yeah, I think I made this one earlier. Let's just get to the two scenarios that I have here. Okay. Cool, sorted. Let's start. What's up, Swagze? How you doing, man? Ice Cubes lady, welcome, welcome. What's the most likely scenario after wave C? Look, it can still be 1, 2, but it's just such a long range. If you do move up, I prefer to count it as a wave C, but currently this move up, of course, right? You're either looking, if price breaks this low, you either look for a flat ABC, bullish. Alternatively, a finished ABC, you go down and test lower support. If you would move to 105 in an ABC structure, you got to be aware of the potential of triangles, flats, or the WXY. So it just opens the door to a couple of things, but we'll cover that. It's okay. So let's cover the weekly. Time 22 minutes in. That's good. Alan, welcome. Good to have you here. Sigma Rule 001. Yo. From Sri Lanka. Sri Lanka. I've never been there yet. One day. Day one. Okay, on the weekly time frame, your bearish scenario is the following. Even in the bearish scenario, honestly, you're still looking for price to move up. So 1, 2, 3, 4, finishing 5. Now, this target area for 5 here, this is a common area, but if I would do a monthly analysis, or if you haven't yet, you can check my monthly analysis on the channel. It's in the macro and high time frame playlist. It's from a month ago. It's still as relevant because honestly, in 1 month, nothing changed. We're still in the exact same spot as like 1 month ago. So that analysis is still as relevant as ever and has a maximum target of 174K. And then, of course, the minimum target was 81. So it's a big range. But then based on a local price action, we'll be able to get a better idea of what's up. So the probabilities are higher that what's happening here is corrective. Probability is higher to still look for higher prices to come. Right? Of course, the real invalidation for a bull market is basically changing the structure on such a high time frame. But as mentioned earlier, it wouldn't be great to move all the way down to 70. That's a problem. You better not. So in this case here, even in this quote-unquote bearish scenario, you would like to see a wave 5, preferably still higher prices, and then locally 1, 2, 3, 4, 5, with the potential of still 1, 2, 1, 2, 3, 4, 5, 4, 5. So 2 more highs up. Yeah, nonetheless, right, you're eventually looking for a top. But don't forget, we already had a big move. So it's already a very nice bull market so far. Your more bullish scenario is what you see here. So 1, 2, 1, 2, 3, 4, 5, 4, 5. You can be very creative and add a couple of 1, 2s over here and then add another couple of 4, 5s over here. But it makes things way too bullish, which I don't like. And I agree with Tony Talon. He has someone at what's the club called? Like Trade Devils. And they do Elliott waves as well. And Tony he's a great Elliott wave analyst. I actually watched a video of him recently on the Trade Devils YouTube channel, so you can check it out. I'm not sure if it's the most recent one, but because I don't know if they uploaded after, but it's been uploaded, I think, yesterday, 2 days ago, 3 days ago. And you see that there's a lot of things aligned between how we count, which is great to see, but also very knowledgeable. 30-minute video, can recommend, and generally a great Elliott wave analyst, in my opinion. I've checked some of his stuff on Twitter as well, and I really like his style. Can't say that about everyone. So, look, we are over here looking for a 5 to finish. Your more bullish scenario is a couple of 4, 5s. Got to be aware of time. These ranges are very long, very sideways in time, right? Couple of months. Now, generally, wave 4s are longer than wave 2s. Rule of alternation, wave 2 is relatively lengthy, so maybe your 4s are going to be deep and short. But still, we're already in February, right? Question mark if this 3 is then in, yes or no. But you're still, if not, looking for a 4, another move up, another 4, another. You're going to end in 2026 if this is the pace that we're going at. So it's not fast enough. It's just not fast enough, which lowers the probability. So I have no problem with a couple of local 1, 2, 1, 2, 3, 4, 5, 4, 5s over here that take a shorter amount of time, which then makes sure that we can finish this bull market in 2025, which has the highest probability from a time perspective. Now then on the daily or the 4 hour, I mean, I tend to go to the 4 hour here as well, but on the 4 hour, currently have this going on. It's, there's always, and you'll see it as well on different places. This part of the chart can be incredibly confusing. What wave 3 and 4 are we looking for? Now, by all means, the general consensus and something we've been covering for a long time is we're still looking for higher. We're still looking for price to move up. Probabilities are higher that whatever is happening here is corrective, not impulsive, increasing the probabilities to still move up, unrelated to local price action, which of course can continue a range, sideways ranging structures, right? WXYs, flats, whatnot. Target area on the chart, however, preferably you do not move this far down, because it's not a rule, it's a guideline. A wave 4 of a higher degree tends to retrace to the termination point of a wave 4 of a lower degree. This is your termination point of the yellow wave of 4. Now, arguably, you can see yellow 4 is below green 4, below blue 4, and equal to white 4. So, of course, this higher degree wave 4 here moved to the lowest degree 4. You just quite simply don't want to lose this range if you're looking for wave 4s, right? You do like a wave 4 structure, 4, 5, 4, 5, 4, 5, to be either a bit of an upwards grinding type of structure, or by all means, minimum, this one to hold. You don't actually want to move below 85. It's just, then you're not going to count this really as a high probability wave 4 anymore. You're either looking for a top in and down we go, as mentioned at the beginning of the stream. Alternatively, you have to zoom out and then count this as 2, 3, 4, right, 5, without then touching this high. That's the end of the bull market. Yeah, it's just not really something we are looking for just yet. Local price action is not giving any clear indication yet. It wants to go all the way down there. If this, however, of course, becomes a diagonal, preferably another low, 3-wave corrective structure, and then a move down, of course, there's the potential to then take the low, take it from there, right? So have a bigger diagonal structure, but we'll see. We take it step by step. This is, of course, still very, very hypothetical. Alternative bullish scenario here, by the way, is you're already in, or the green 3 here, finished at this top instead of this one, range, you still look for price to move up. Yeah. The reason why the probabilities generally are higher to still move up is basically because of this structure, which is very much a 3-wave structure, not a 5-wave structure. If you really want to change from a bull market into a bear market, then you preferably start after a high with a impulsive structure, right? A 5-wave impulse, or motive structures, I should actually say, because an impulsive structure is what you see on the chart. But alternatively, motive-wise, you can also start with a diagonal, preferably contracting a diagonal, right? And then your most bearish option actually is a multi-1-2, which is part of an impulse. But basically, you create a 1, you create a 2, you create a 1, 2, 1, 2. It looks like a diagonal, but then you get the big drop. So you actually never get the retracement and then come back down. Completely skips it. You just fall, which hurts the most, as people think, oh, we just have a little retracement, and then boom, and then all the profits are gone. So these are basically the 3 structures that you are looking for if you really want to see a deep retracement, or basically a bull market end, and then your first retracement is preferably impulsive. But as mentioned, this is incredibly 3-wavy, and as over here, the move down looks very much like a 3-wave structure. The only scenario, or you can look for 2 scenarios, but you can't count an impulse here, 1, 2, 3, 4, 5, because of the overlap, so that's not allowed, which then leaves you with a multi-1-2 or a diagonal. Now for a multi 1-2, you need to count 1, 2, 1, whatever, 2, and then 3 towards the downside. Now, if you count this, and I actually do have it somewhere. Yeah, there you go. So if you count it like this, then your first wave 2 here in yellow is a incredible 11 times longer than your wave 1. That's very, very, very long. That is something that would be more common for a corrective structure like a B or an X instead of a wave 2. So that lowers the probabilities for counting this as a 1-2 and look for another 1-2 to the downside, which of course would be your by far most bearish scenario. After a double 1-2, you look for 3, 4, 5, 4, 5. It's basically the end of your bull market type of scenario. Just doesn't have the highest probabilities. If price can move up also and actually move to the 886 sitting at 104.7k, which is also in confluence with the resistance that we have up here, then the probabilities for this scenario are like just like I don't want to joke around, but incredibly low. They're already low. They're going to be even lower. We have it in the folders because we got to be prepared. You know, a good Elliott wave analyst always has bearish options in bull markets and bullish options in bear markets. You need to have an analysis that goes both ways and be able to determine the probabilities based on your analysis, right? So here we have the time of wave 2, very long compared to 1, lowest probabilities. Your second wave 1 is longer, quite a lot longer than your first wave 1, which is not preferred, as preferably in a multi 1-2. You actually create a bit of a diagonal where your second one and third one, they're a little bit shorter every time. They can be quite equal, but not like very much longer. And you can also see a volume peak here in the low, also very typical for a wave C. It's not like a great impulse where you have a 1, 2, 3, 4, 5, where the highest volume is in 3, volume is in the low, which tends to be more typical for a wave C structure or a wave C of a wave Y, right? But at least a corrective structure instead of an impulsive structure. Now, wave C is an impulse, but C is part of a bigger corrective move. So those are certain things that one can look at. And then, of course, we have the diagonal, which then means, well, if we can count this as a 3-waver, right, then, arguably we can just label this as a wave 1, no? And then look for 2, and then look for 3, 4, 5. The issue is it's too early for such a big diagonal, 1, 2, 3, 4, 5. It just doesn't make sense to talk about it. I have seen the expanding diagonals where people, where's the one? I think they put it over here. 1, 2, 3, 4, 5. Wait, I think it's something like this. 1, 2, 3, 4, 5. I forgot. I actually had it once on my chart to check, but I forgot the exact. I think something like this. Expanding diagonals are incredibly rare. They are never preferred unless all the other scenarios fail, which basically is not the case. So that's why I don't have it on. I don't have it in my folders. Very low probabilities. So in other words, probabilities are higher. This is corrective, and whatever happens locally, right? That's low time frame stuff. Bit of ranging, taking lows, taking highs. Higher probability. It's all corrective, and you're still looking for price to move up at a later stage. Okay, and then we get to the 1 hour time frame where I explained this morning. These different lines. Yo, Adam, how you doing, man? Welcome. Yo, Ben, by the way, welcome to Goldman. What's up? Welcome to the team. You probably filled in the form already, so we'll get you sorted. Nice green badge, by the way. Cheers, Ben. I will see Adam as well in America. I look forward to the trip. So anyway, let's explain the 1 hour time frame. And I will explain it in a bit more detail because in the morning update, I did not talk about a couple of things because it would just extend the update a lot further. And it's sometimes I feel it's a bit too nitty gritty. Some people love me going into the details of wave counts and the lower time frame stuff and why. But sometimes I just like to keep it more simple, talk to a bit of a broader audience, I suppose. So I'm going to explain these scenarios, but I'm going to highlight a few things that I didn't highlight in the morning update, but they have been on my mind. So first of all, this is, of course, your most bullish scenario. 5 wave, 3 wave, you look for a 5 wave. Price should not move below, preferably the higher low by now, right? If you're looking for at least a multi-1-2 type of setup. But in this case, you then have a WXY. Okay, alternatively, you put this W over here and you then have A, B, C, right? Where this is then a diagonal. It fits, just fits, just doesn't fit. Depends on the platform you're trading. On some charts, this low took that one, so a triangle would be invalidated. But by all means, your W is either there or there. It doesn't matter. I got it over here. Then you have your wave X, and then you look for ABC down in a wave Y. Now, this is a double zigzag. And what is interesting in this particular count for a double zigzag is that, of course, your W and your Y should be an ABC structure, which is a simple zigzag structure. Can't be complex. So inside Y, you want a 5, 3, 5. Same in W. Okay. And that's why in some cases you can arguably put W over here because, of course, you can see it has a bit of a 3-wavy structure for A, B, C, D, E for the triangle, where on my chart, the lows did not get taken. And then this is your C to the downside to enter a W. But then again, it doesn't really matter where you put that W. You just put it in the middle. And then we have our wave Y. And this is, of course, where this is the nitty-gritty stuff. So if this is not mentioned in the morning update if you want the simplified version. But we got to go to lower time frames here. So let's jump to a 3-minute. So for the most bullish scenario, this move down has to be an impulse. This one. This has to be a 5-wave structure. Now, I generally don't really go to the lower time frames, but this morning I was interested because we touched my box. Finally, we touched the box. Like, had to wait a very long time for price to touch that box. So I was interested, like, what's the chance, right? Are we actually, like, are we done or what's going on? So we need a 5-3-5. And when this move to the downside here happened, it's tricky, of course, to count this as a nice 5-wave structure. Let's be honest. It looks very, very, very much like a 3-wave structure. You have to force almost a 5-wave move in here. This is the 1-minute time frame. You got to clip this because I never go to the 1 minute. So this is a highlight on the channel. Now you got to be very, very, you should disregard time and ratio if you want to count this as a nice 5-wave, because these are then these got to be 3 1-2s. And this is 4, 5, 4, 5, 4, and then your last 5. So in other words, these are your 1-2s. And then these are your 4-5s. I mean, yeah, it doesn't really look that great, no? Yeah, exactly. So I don't really like it as a 5-wave structure. It's difficult to convince myself like, yo, this is a great 5-wave structure. It's not, right? It's not. And then if we look at the move to the downside here, that created the low. So you want this to be a 5-wave as well, right? To finish your wave Y, no? So you want to have a 5-wave structure. 1, 2, 3, 4, 5. Now, first of all, if this is a 1, 2, 3, 4, 5, wave 2 touched the 886. As we know, wave 2 touching an 886 is not very common. Okay. And then also your wave 4 touched the 618. Taken, did we have overlap? No, we just missed out on overlap between 1 and 4, which would be the hard rule. But if you take a fib from the high of 2 to the low of your 3, toggle on the 618, you did touch the 618, which for a wave 4 would be incredibly, ridiculously rare as well. So then again, you have a 2-886, you have a 4-618. It's not really something that we enjoy to see in a 5-wave structure, right? Officially, it's not invalidated, right? Rule-wise, wave 2 didn't take the origin of a wave 1, right? and your 4 does not overlap with your 1. But if we include Fibonacci, it's definitely not a ideal scenario. So of course it does impact the probabilities. And this morning, when I just keep things simple, this quite simply remains your bullish scenario. We were waiting for this box for so long. I had a limit order here, which got touched overnight because I wasn't in front of my PC when this happened. So I'm positioned, I'm well. My stop loss is already in profit because if this is not going to be impulsive, I want to be out and I look for my next box. So quite simply, if it goes, cool. Yeah, I'm happy. Then we go, right? And then tada, got an interesting resistance, which obviously is a place where I got to take profit as well, because then 105 is basically what I am looking for. And if we come back down and then change the market structure, okay, nice. I'll look for my next area of support and look for a new entry there. So it's not a great wave Y. It's not a great zigzag. It has a very three-wavy nature to it in a way. But if we zoom out, you can see, okay, sharp, sideways, I mean, 5-wave structure. There's the potential at least. So, okay. This, of course, quite simply is not invalidated till you take the lows. So, yeah. But, do with the information as you please, of course. From I mean, no financial advice, obviously. But that is a little bit of the nitty-gritty. So that then brings me, and this is why I also covered the diagonal and the WXYXZ. Which arguably, if you talk about this not looking very, very nice. Oh, wait, this is another scenario. Sorry, this one is not a great scenario, right? Because of the lower time frame structures. Arguably, you got to think, okay, what's the chance of a WXYXZ or the diagonal? We'll get to that in a moment. So continue with the scenarios. This will go a little bit quicker. Basically the same scenario, up, sideways, up, W, right, wherever, doesn't matter. Then you have your X, and then A, longer B, C. In this case, B is a flat structure, 3-wave A, 3-wave B, 1, 2, 3, 4, 5-wave C, right? So you're going to have a 3-wave structure. You don't want price to move above this high at 100.2K. And this is then, again, labeled as a 5-waver because it's labeled as a wave A. Next scenario, right? WXYXZ, incredibly rare to count WXYXZs. I think in the book Elliott wave principle, I think, or on the website, I don't know where I saw it, but somewhere in their content, they saw this maybe once or twice or like whatever. Like it's incredibly rare to see WXYXZ triple zigzag structure. It basically extends the correction in time. That's the goal of such a corrective structure. But in this case, of course, you would take out that low and then look for a bounce. And you can see that, okay, take the low and look for a bounce, right? And here, we just continue, right? And guess what? Here you take the low and look for a bounce. So in all these scenarios, you're still looking for a bounce. You either look for continuation up, cool, bullish, nice, right? Invalidation is this low, or a bounce and then move towards the upside. Now, in this bearish scenario, which is a diagonal, you then have a 3-wave, 1, 2, 3, you look for 4, and then wave 5. The invalidation for your wave 4 is, what was it, 99? I showed it this morning, 99.2-ish. Yeah, so 99.2, 99.3K would invalidate a contracting diagonal. Expanding diagonals are very rare, never preferred unless everything else fails. So in other words, if price can move up to 99.23K, that's good. That's good for the bulls at least. So if we combine these scenarios, lots of chatting, right? And it's sometimes being someone that enjoys detail can be a pain in the ass. So that's why this morning I was like, you know what? I'm not going to go in detail. It doesn't matter anyway because we're looking for a bounce. Yeah. So I got a question afterwards, I think in Discord, which of course is a solid question. It's like, what's the probabilities of the blue line? I mean, look, probabilities for the blue line are absolutely there, else it's not on my chart. And as long as we don't break structure at least and move to the downside here, blue line, right? It's active. We have bullish CVDs on the 4-hour, right? You have bullish CVDs here. You had some bullish CVDs here. I think we just now had some more bullish CVDs here that played out as well as price moved up and took the highs of this range. So there's absorption going on of market shorts with limit long orders, which is of course things that we do like to see. But when we look into the lower time frame, it's not very nice Elliott waves. It's not great structures. We cannot deny it looks a bit three wavy at times, but so these are your polylines. And as mentioned, I'm already in a position. I'm risk managed. Stop loss is already in profit. I just cool. If we come down, I'll look here. If we continue up, cool. I'll look there. So that's my trading plan in a nutshell. I either get stopped in a little bit of profit, or we move up to target. And if we move down, I'll look for a new entry. So, and then this is an area of interest. Of course, if we can then also flip the white box again, that would be very attractive. So, so I think it wasn't a surprise to most on the channel here that I was looking for the box, especially on Friday. We were talking about, man, I can't believe price going and I'm not touching the box. And then during the weekend in gold, I was chatting in gold, and we were like, shit, still not touch the box, still not touch the box, still not touch the box. Jeez, man. And then eventually we did touch the box. So, that's that. Oh, one thing I do want to say is if you do take out the low, a bounce is expected, still has the highest probabilities. However, if this bounce is not impulsive but corrective, we're going to be looking for price to move down and take the low. If this move to the upside is impulsive, right, we look for the high. So it opens the door basically to at least the bearish scenario I have on my chart here. Yep. So yeah, that's it basically. Anything else? Anything else? No. So it looks like an impulsive move down. 1 2 1 2 3 4 5 4 5 ABC. Price took the range again, as you can see here. All right, so very much a three-wave structure, increasing probabilities to take out this low, which it might just do in a couple of seconds. So your bearish scenario locally is 1 2, A, B, and then this is your wave C to the upside. Your bullish scenario would be a 1 2 1, maybe a flat in 2, and then continue. You just don't want to change the structure. So and if we look at the scenarios as explained, and of course do with the info you like, but arguably counting this as a nice 535 is it's not too awesome. So I'm definitely considering WXYZ as well as a diagonal, and possibly something like this if you can count some sort of some sort of an A in here. Who knows? So I wouldn't mind testing lower support. But yeah, that's that really. New York waking up. Okay. There we are. 50 minutes in. I'll be online for an hour unrelated to volatility because planning. I personally don't use the liquidation heat map. I don't use it in my trading. Have a little look what happened here. So we were somewhere. This guy. Cheers, Abdul. Trez, how possible is the bearish leading diagonal from all-time high and 2 up completed? there's no, like, if you, I didn't even know, are you a leading diagonal? Oh, that would be a 1, 2, 3, 4, 5. But again, that's an expanding structure, and expanding diagonals are incredibly rare, very, very rare. So it's just, it doesn't have the highest probabilities basically until you end up at like 80K. 1 second here. When did we start? At like 23 minutes? I don't know, 24? Let's just do 24. If people end somewhere in the middle of the analysis, that's fine. Okay, there we go. Oh, cool. Happy Monday. Alan, welcome. 618 come from for a wave 5 on the weekly. Well, if you're looking for a wave 4, you take the 618 from the start of wave 3 to the end of wave 3. So that's where it comes from. Danny, preferably enter bull market around October. No, between March and October. And then depending on the look how long this range is already, right? It's definitely since November. So we've been there for a while already, which is all cool. I don't mind moving up and starting a new range for maybe a lower degree wave 4 again. But March to October is the time area basically, and then depending on local price action structures, we'll be able to get more specific. Yeah. What do you think that we are in correction wave 4? Where the bottom in October 22 is A. Now we're in the top of B, and in a while we will be in a C. Oh, you're talking about a flat on a weekly time frame. Yeah, most common flat is an expanded flat, and that would mean wave C goes below 15K. I mean, imagine buying Bitcoin at 15K again. Yeah, do not mind. But yeah, probably a running flat would be better in that case, which then means ending somewhere around 50, 40, 618 from 15 to 100K, basically, golden pocket area. But yeah, it's not the highest probabilities. Wave B has to be a 3-wave structure, which means from 15K to 100K, you need to count it as a zigzag family structure, which then has to be a WXY double zigzag structure. Bogdan, welcome. Tim, what's up? Tut Chavion or Chiavon, welcome from Argentina. The 1 hour or also 50 minutes CVD also shows a big bearish div indicating to take out 94.6. Let's have a look here. 30. Let me close this, by the way. Up. I don't see. I don't have a bearish CVD here on my chart. So I'm not sure if you talk about exhaustion, but I only look at absorption, so not exhaustion. There was a bearish CVD here, but this one played out as we then took out the low. The bullish CVDs here locally all played out already as well. So at the moment, not really any CVDs. Maybe on a 3-minute, we took out the low here, by the way. But this CVD, of course, is not interesting, right? Because price moved up, made a new high. And after a high, you preferably look on the right side, So price just falling, CVD falling as well. How probable do you think that is? I don't have the same divergence there. The falling diagonal is happening in the lower time frame. Possibility, absolutely, yeah. Leon, what's up? Do you use DXY? I do not actually. I don't actually use any other chart than Bitcoin. Can you elaborate why CVD on the high time frame always goes down? Who asked me this question recently? I think Mr. Friends in Discord. And look, I know a lot about what CVD is, but basically my explanation would be that as Bitcoin, as the popularity and the name of Bitcoin becomes bigger, as more and more and more people start to learn and know about Bitcoin, generally it's going to be in more portfolios. More people are going to invest or buy. What CVD shows is market buying and market selling, right? And people just, they keep buying which of course CVD moving down is a bullish CVD, right? It's a bullish CVD, meaning shorts are absorbed by limit longs. And as the name of Bitcoin, popularity of Bitcoin, news of Bitcoin, everything increases, you of course get a lot of new investors and people that join the market, which then I believe leads to the CVD on the higher time frames always moving down because people just keep buying. They just keep buying. Unrelated to price. It's just the popularity. People put it in their ETF or people buy the ETF and put it in their pensions and whatnot. So CVD is therefore also most interesting on only the lower time frames. That's where CVD is strong. 3 minute, 5 minute, 15 minute, right? 30 minute, maybe an hour. That's like the best. The range for CVD for me is 3 minute to 1 hour. I don't go above the 1 hour generally, as it's just not as relevant. You can potentially look into a 4 hour, but it's not as relevant, as that's the moment where you start to move into too high time frames. And what CVD shows you, as mentioned earlier, is market buy and sell orders. And if locally on the lowest time frames, right, you can see a bearish CVD, then that's relevant. That's information we need right now, right? That's something we can act on at this moment. And if on a 4 hour time frame you have a bullish CVD, while on a 15-minute time frame you have a bearish CVD, price just, higher probability you're going to move down. 1 second, I'll have an example. Remember this move, right? Move to the upside here, impulse, wave C, price came down. We had great bullish CVDs here, by the way, right? But we still took out the low. I'm on a 4 hour chart, right? This is like a 4 hour CVD. But on the 15-minute, as price moved down, bearish CVDs. This whole move was supported by bearish CVD divergences. Even though on a 4 hour, it may have looked like we had bullish ones, right? Don't be tricked. Look into the lower time frames. You can even see it between sometimes a 3 minute and a 15-minute chart, where the 15-minute may show a bullish CVD, but on the 3 minute, you're getting the bearish CVDs, and eventually you take out the low. In this case, of course, we talk about taking a low. So yeah, focus on the lower time frames. It's always best. Bitcoin dominance, we are at like, it's, I think I looked at the dominance not too long, but it doesn't have, we hit resistance, weekly here. So this white box is basically your resistance here on the chart. Quite simply, support, resistance, order block. I don't really have any analysis here. As you can see, this is very, what's this? It's a channel. Not very useful. But yeah, it's a percentage chart, not a price chart. But what you can see here is this grind. And that grind is typical for 4/5s. Right, so you have more impulsive structures up, a couple of 1-2s in here, undoubtedly. And then you get to your 4/5, 4/5, 4/5. Now, at the moment, this structure is a 3-wave. So Bitcoin dominance, you either look for 1, 2, 3, 4, 5, and then you correct again. Or this is A, B, C, and then you move up after. You don't want to end on a 3-waver. That's bullish if you make a high after a 3-wave structure. So, but you add resistance on the Bitcoin dominance. I don't really use dominance myself, though, gotta say. That's why I also don't have any. I don't have any analysis on the Bitcoin dominance myself. Can we have from here impulse to the downside? Yes. Isn't A in a flat 3 waves? Correct. How is your approach to set a limit order and risk management? Stop loss is at the invalidation of the scenario. Entry is in confluence with, of course, other areas of support or resistance outside Elliott waves. Elliott waves creates a bias, directional bias, but I like to use other tools as well. And then, play the probabilities. So Elliott waves gives great. So this is something I think we may have a short about this, but I'm not sure. So what Elliott waves gives you is a great directional bias, and it gives you a target area. So if, for example, you have an impulse to the upside, 1, 2, 3, 4, 5 wave structure, that's your wave 1, and you look for a 3-wave corrective structure to the downside in a wave 2. Now the target area for a wave 2 is between, most commonly, the 0.5 and the 0.786 Fibonacci, right? Now, depending on the time frame, this area, of course, it's big. I mean, arguably, depending on what type of trader you are, day trader, still can be quite a big area. And that is why I like to use, and many others as Elliott Wave analysts like to use, additional tools to find support and resistance areas inside your common target area, right? So if in this area here, your most common target area, 05786, you have a great amount of confluence around that 0.5, that is a level of interest. And if below the 0.5 it's empty, I'm not really interested in joining here, right? But if maybe around the 786, there's a great amount of confluence, and on the 05 as well, then those are two areas I keep an eye on. So those are two areas of interest. So in confluence with the directional bias that Elliott Waves gives me, because a 5-wave up, I'm looking for a 3-wave down and then continuation to take the high, I wait for price to basically approach areas of support or resistance, which tends to be my target boxes, and then based on the reaction, I act. Or I preset, right? So, yeah. Yearly open. Old school. I used the yearly open back in the day. You look like Henry Cavill. Thank you. I don't yet have the muscles, but we're working on it. Just gonna say, people should read the monetary policy report. Sounds like QT is about to end. I don't know what that means. QT, quarter? An extended wave 5 could fit the cycle timing, and in 2025, I mean, we have done 1, 2, 3, 4 from 15, currently 1, 2 of the 5. That would be, of course, a very bullish scenario if you do drop below 80. But of course, it's not going to be a preferred scenario, as an extended 5 remains a very uncommon structure. In the impulse, if you would put the impulses in order, then extended wave 3, extended wave 1, extended wave 5. Or actually, if you talk about weekly timeframes, extended 5 is more common. So then extended 3, extended 5, extended 1. The reason why on higher timeframes extended 5s can happen more often is because the market has been going up for such a long time. More and more people join and become part of the market. So it extends the fifth wave, which then becomes the highest volume. That's your typical like blow off top. Do you believe in a P-pi cycle top indicator? I don't use it. I don't have the information about it. I heard about it, but I don't use it, so I don't really have an opinion about it. I would need to check it myself in order to really have an opinion. How do you know if there's absorption? Make sure to check out this video, because I explained CVD and everything about it. If you go to in the description, just scroll down a little bit. There's a LINKTREE link, which gets you here. And then you scroll down to playlists, educational content, click. And then you go to CVD, this one here. You will also find this video on the homepage of my channel. So this is the one. This will explain everything you need to know about CVD, including absorption and exhaustion. 1 hour CVD has 4 50-minute candle close 12. Wait, 1 hour CVD has 4 15 12 5. I mean, you're correct. I don't really use it as how many candles fit in a time frame, but it's just you want to use CVD with what's happening now locally. That's the best for CVD. So have you ever used Atas? Yes, I use it every day, but only to find my point of controls. So so not the red ones, the blue ones. The blue, the purple, and yeah, just anything that says NPOC, right? MNPOC, DNPOC, WNPOC, somewhere down here. Weekly, daily, monthly. Yes. But I don't use ATAS for anything else. So in the morning, my analysis basically is I boot up the chart. I first go to the daily, weekly, or actually the daily time frame to check if we got a new daily level. So for people that don't know, price moves up, bullish candle, next candle is red, that close there becomes a daily level, right? But yeah, you can see over here we don't. So and then after I check this, is there a new one, yes or no? I go to ATAS, I check point of control, so I just boot it up, boot up my Windows system. This is Mac. I boot up the Windows laptop here on my desk. And then I check it, and 2 minutes later I close it again. Then I check Elliott waves, and then I after Elliott waves, and then I'm done. I do tend to check volume profile as well, as I do like volume profile. So I check volume profile as well. I tend to check fibs, but then I'm done, and then I continue working on my trading plan for the day, basically. So okay, it's time for me to leave, yo. Kurt, last week you emphasized the correction should take till the 18th of February. How is that relevant now? That's on the daily. So whoops, 18th. We're at the 10th now. So we're getting there. Pop. So here, if you look at this as a 3, then yes, you want this correction to at least take until the 18th. And in your, I suppose, a bit more bullish scenario, you already passed the 1-to-1. So this one could theoretically be done at the low. Where is my... oh, yeah, I have a vertical line. Wait. So the 1-to-1 right here. And if you end for here, WXY, ABC, that's the end. Then theoretically you already passed the 1-to-1. But in order for price to then move impulsively towards the upside, you would still look for either a wave 1 or 2, another 1, 2, and then continuation. So I think it's still very likely, even if a low is in, that you're only going to fly after the 18th. Not to forget, a triangle here is still an option as well. So yeah, I'm still I'm not. Let's say I'm not yet convinced that this is a 1, 2, and poof, right? This is a very long range for a wave 2. It lowers the probabilities for a wave 2 that this is so long, right? Probabilities for if you go up impulsively, A, B, C, or A, make another local low on the other support, and then C. That makes more sense to count it A, B, C with alternatively your diagonal. If you do take out the low, move up correctively here, then a diagonal gets higher probabilities, and you look for price to take the low, which basically means you're very likely to correct till minimum the 18th. So yeah, we're probably in this range for a little while. What's up, James? I'm gonna have donuts in the US soon because like my wife, we've been checking like the trip and stuff. Then my wife said, oh, we got to also have typical US stuff, right? I mean, when we're there, of course. So it's going to be fun. Okay, everyone, I got to go. The agenda is calling. We analyzed the chart, minute 15. Who said it? Grillion. 15:02 is when the analysis started. Thanks, Grillion. So yeah, I wrote somewhere here 24. 15, really? No, I thought it was 20. I'll put it into timestamps anyway. But yeah, thanks for being here. Tomorrow morning will be a new update. The analysis happened earlier this morning with a video in the live stream, of course, around minute 20, I believe, somewhere there. So yeah, if you want to know the Elliott wave probabilities in this range or higher time frames, then check out this live stream. If you're only interested in the local range, check the video this morning. Tomorrow morning will be a new update. And then let's see where price is. We have some news as well tomorrow at 4 p.m. So Fed Chair Powell testimony. No idea. And then on Wednesday, we have some high impact news. Wednesday is going to be an interesting day. Curious to see where we are on Wednesday. It's going to be probably a very volatile day. So Yeah, thanks everyone for being here, and I'm going to catch you at the next one. Trade safe.